Hey, good morning, everyone. This is Charles Sniper again with a weekend market review. So we'll take a deep dive into the major indices and also probably some of the stocks that a lot of people follow. And this is for the week of 7th to 11th, the February 2nd week that we'll be looking at. So to get started, just let's just deep dive into the indices. Okay. So let's start with the SPY overall what it has done. So it was a very good bounce. I would say at least it came back to the 61.8% retracement. So which is pretty good. I mean, if it had died or fizzled around this one, then that would have been more bearish. But it came all the way up here, so which is pretty good. And also, whatever the channel that was established before, it broke down that channel and now it is trying to kind of retest that channel. Okay, so what we would like to see is it kind of takes some time to consolidate, and along with that it takes some time to kind of digest this move for a few more days. And as long as it is staying in on at these levels, so it's kind of not so bearish. Okay, I would so what I would like to see here is a higher highs and higher lows. So that's what the pattern so far is. Based on these two levels here, we are hoping that, as long as it stays above this uptrend line, we should be good. Okay. So so far looks good from the consolidation perspective. It's a healthy consolidation. It's not trying to make, as long as it doesn't make a newer low against these levels, I think that should be okay. And this is pretty common, move and then digest some, and then as long as it stays afloat, we should be okay from mild bullish perspective. With that, talking about at a very high level the levels of it, we want it to stay above 443 and we want to break out above 457 next week. Okay, so we let's change it to weekly. So weekly candles, when you see it, even though there was some pullback towards the end of the week, still it is a kind of a very constructive candle. It made a higher high and higher low. So as long as that is maintained into next week's, we should be pretty good with respect to the direction of the SPY towards mild bullish. So let's lay over some averages and see how exactly it looks with respect to the moving averages and stuff. So what we are looking at is it is trying to kind of stay on top of the 200 days average, which will be very constructive if it doesn't break it again. So all we would want to see that level very carefully, and that coincidentally um, overlaps with that 443 level that we have, that 8.2 retracement. Okay, so we would like to see a consolidation happening between these two, and slowly it gains the 20 days average, and then the slow grind higher kicks in to start moving slowly, one average at a time. This is the 50 pointing downward. Ultimately, if it goes above and breaks up about this, that will be a resistance level that we would like to watch. Okay, so overall below the cloud, above 200 days, but below 20 days average. So yeah, it's trying to kind of form a base. That's what I would say. And 6.5% from all-time highs, and around for a quarter, like 4% down for the quarter. But for if you take the entire one year backward, it's still 16.19% up. Okay, so that's pretty much about SPY. It's trying to form a base here, and hopefully it doesn't make new lows. As long as we don't make new lows or lose 200 days average, we should be pretty good here. Okay, and if we lose that, then again all these levels are open, like the level at 438, the downtrend line for this one, and then we'll be looking at it trying to hit the lower Bollinger Band and continue lower. Okay, so no one knows in which direction it will move. It all depends on crowd behavior and whether the big players who typically support the market would like to support it or not. Okay, from on a weekly perspective, what we are looking at is it tried to kind of move over 5 and 8, but it failed. But it doesn't mean that it can't regain that next week. We have that 50 weeks average support here at the downtrend line, uh, the uptrend line that we plotted there. So probably it might go there and test that trend line and bounce back, forming strengthening that trend line. Okay, so that's pretty much it so far. It's not completely out of the woods, but again, it's not kind of doing a free fall also. So let's go and look at QQQ. Again, so when the market is not trendy, right? So the market is not trendy, it's going sideways, it has been sideways. Try to stick to the overall indices to kind of reduce, thinly spreading across, analyzing multiple stocks and getting um, some losses by picking up a wrong direction in a specific stock, right? So whenever anything loses the 5 and 10 8 days average, you got to have get into a tactical mode. If the market is overall falling and negative, most of the stocks typically have to follow that. Okay, most of the stocks I say. So that's why I would try to kind of stick to the indices when it is going sideways. But whenever the market forms a uptrend, then I would go and look at individual stocks. Okay, so that my focus is completely to come out of these difficult times safely. Okay, so let's review QQQ, how it is doing overall, the tech stocks. So when we look at QQQ, it's a little bit weaker than SPY for sure. It could not go all the way to 61.8, but it went just 50% retracement of this entire down move, and now it is kind of trying to form a base again. I would have hoped that it would stay above this one, and it closed above that level, but now it tried to kind of make a low, visit some of the levels below that level. So if it had stayed above 357, it would have been nice. And this gap down is strange because that shows that there was clearly no interest among the big players to take it further higher. Okay, but still on a weekly basis, we are looking at that higher high and higher low pattern, and it's trying to stay above the last week's close. So that was pretty good. And if a similar thing happens here, there will be you will see one more a week of higher and higher low, but not that big move as such. And it's pretty common. If you can see here what happened, there is a one red week and one green week completely engulfing that body, again one red week and then one green week, right? This is called a choppiness. And whenever this is red, you think that it's going to go further lower and probably come out of losses, and then it goes higher. So you came out of the boat here, and now you're just watching this go higher. And if you have enough capital at the end of the week, you'll get very tempted to kind of put the money back to work because it's trying to go higher, and then the next week it goes lower, right? So it's typical trading. They're playing typically with the trader psychology there. I mean, so that's why you should try to stay away from such kind of things by moving it to a longer term weekly time frame and see if it is above the 5 weeks average. No, it is not. So until as long as it is below 5 weeks average, you should be very tactical. I mean, there can be a lot of noise, and let it come back above 5 weeks average, and then you can play this kind of moves. Okay. So whenever it starts forming the trend, you see that continuous trend. This is a bullish kind of trend, and you stay long the market, the stock, individual stocks, and then whenever it loses, you kind of stay cautious, okay? And then you can probably get back here. to play to the upside. But this is a lot of choppiness, and this is kind of a bearishness, I would say. As long as it stays below 5 weeks average, we are looking at a continued potential move down. Okay. So the cloud is very thick on weekly in QQQ, and it should form a support. I plotted this trend line, so even that level could mark it as a support. I would want it to see gain above 50 weeks average, which aligns more or less with 200 days average, right? When we talk, not 200, yeah, 200 days, not 200 days average quite, but yeah, half a year versus, this is almost 1 year average. Okay. So, but overall looks like, the 50 weeks average is at around 360. So we would want it to go above that. Okay. So let's go and see on a daily chart how it is faring. Um, just for one day, it kind of gained the 200 days average, and then it lost it completely. Okay. So what typically happens is, as part of forming a bottom long term, as you can see here. So there is this down move, and then there was again a revisit of that close, and you can see that, a W formation, a inclined W formation forming, and it's very very commonly seen. Say here was that, and as you could see, here is another scenario where it tried to kind of wants to go and test and see to push it down, and if it can really go down or not. If it can't go down any further, then it starts rallying higher. So here, if you can see that down move, a move higher, pull back, and then go higher, right? So that pullback is constructive still from a long-term perspective. Okay. So, and that's what we are seeing here one on one, right? So those kind of things, I hope, like here, this one versus that one, right? So I hope similar kind of thing forms here, a higher low, and then we continue going higher. Okay. So that's pretty much how it looks on QQQ. It's weaker. I would want it to regain for sure the 200 days average, and whenever it does that, right, probably this week or next week, you have this huge gap to fill from 366 all the way to 380. That happens very quickly. Like these bars that you see here, two days was sufficient to kind of cover that entire curve. So look for a gain above 366 all the way to play until 380, right? Or maybe you can wait all the way until it goes above this level. So you can have a buy stop at 370, I would say, and so that for a play until 380, that would be a safer move. Okay. I would want this to happen faster so that we don't see a negative crossover of 50 and 100. But yeah, let's see what happens next couple of weeks. Okay, this is in a correction territory, less more than 12%, more than 10% pullback. Okay, now let's see a little bit stronger Dow Jones. It's still average. So this has been pretty good, and it kind of moved back about 200 days average quite early, and it's also trying to form a higher low. I would say if we can draw a trend line here. So it probably gives a sign of what is coming for the market overall, the way it has been behaving recently. So if it touches that and bounces back, then market also might do the same thing. Okay. So there is a small cluster of averages here in small range around 350 to 355. So you would want to see above 355 for a play to 366, right? So that's kind of how the setup looks like on a weekly perspective. It gained 50 weeks average, and then trying to kind of probably just that range from 350 to 355. You have to be cautious, but once it regains that range, it regained it mid of last week but gave back, but next week probably could be that, and then we can play from 355 all the way to 367 constructively. It's only 5% pullback from all-time high, so that's why it's very constructive. So when we look at IWM, so from on a long-term weekly basis, it's hovering on top of that 100 weeks average, which is equivalent to almost 2 years average. So we would want it's in the cloud. I would say it's kind of a noise for sure. You can't trust anything that happens in the cloud, so it can comfortably come back all the way to 222, and then yeah. So we would like to see it kind of gaining back again, forming a higher low and slowly one, two, and probably three to the cloud. Okay, so we wanted to see there. The volume was very, very low um, on Friday, and I mean there was a buy volume, but the sell volume also was lower than that one, so it should be okay. So we want it to kind of probably start showing some momentum, and overall, if you take 1 year's average, this is the one which is negative 10%. Okay. So overall, from all-time highs, it's down 18.85. So what we would like to see is this range is broken, okay? And if you can plot that range, right? So that range is broken, and we came back probably twice that range down. So, and whatever the move that yeah, if you can see that, so this is a range established for the entire last year, and we drop back below that range, and we moved twice that range down, and now we would want to see the get back into this one. So whenever you have this kind of a very slingshot kind of move, it consolidated there for a long time. It's pulled back significantly, and now there is that much pullback to that catapult kind of thing, and then it launches to make a very consistent long uptrend like this one, right? Consistent move to kind of break above these ranges. Okay, so this gives it enough momentum to start moving higher if the markets remain constructive for this year. Okay. Let's see again how would we know if the market remains constructive? I mean, simple, right? So 200 days 200 days average, we would want it to see it gain one average at a time and start moving higher. Okay, so in SPY, it would be more evident for you that you'll see that it's already trying to stay about 200 days average, and if you could play to bullishness or be mildly bullish as long as it stays above it. Whenever it moves below that, then you can get into extra caution mode. And once it loses that, if you consider this as a B, it can move the same length as this one to lower also. ABC. That is quite possible. No one knows what exactly will happen. Typically, February months are not that great. So we have to see what happens and how they take this one down. Okay, both directions possible. It completely in a neutral zone as of now. It can go lower and even make a new lows, quite possible, or it can start doing the slow grind higher. So okay, so if anyone says they know the direction, probably you can take it for granted that they don't know the direction, because it's uh, probably thousands of big fund managers playing the game, and if out of 1,500 wants to take it down and 500 wants to take it up, that's where it kind of stays in limbo. But if there is that one guy who switches the direction, like 499 or 490 fund managers want to take it lower versus 510 want to take it higher, that's where really the shift starts. And whenever the people who wants to take it lower could not take it for few days, then they will give up, and it kind of gains that momentum to higher direction. Okay, so it's not one player, it's big thousands of big sharks kind of trying to uh, play around and decide the direction. Okay, so it's the probabilities wise, it's very, very um, crazy probabilities and ranges, right? So okay, so with that, we covered most of the all the four major indices, and then let's quickly look at VIX, what exactly it is doing. So it made the 38.94 high, which is good. It gave back, and now it is below the 25 range, right? So the good thing is, as the market is doing, it is below that 5 and 8 days averages. Okay, I would want it to see go below 20s to continue that slow grind higher. Okay, so overall VIX, I think it is done making that moves, right? So it is done. It's trying to kind of increase that volatility there, and it exactly visited that range, and now we would want it to see a, it come and revisit the bottom end of those ranges. Okay, so we would want it to see below 20s and now come all the way to 19. So that way, as long as it is happening, then you can be sure that the market is going higher. Okay, so for now it's in a not such a crazily negative range. Okay, so yeah, let it come down below 20, and we should be good from there. So let's go and look at SKEW. I may have to change it from line. So it is below 129, so that's pretty good. So overall, we did not want it to stay above 135, which is because, but the fact that the skew is coming below 129, which is constructive, and we would want it to go and see below 120 to kind of get into oversold conditions. So yeah, so this is also one other sign that market might stay afloat and start moving higher slowly. We're not seeing much panic in terms of the future options trading there between puts and calls. So let's look at put call ratio. So it was at one. It's trying to come back a little bit, and you see that average. Are still quite high at around 0.81. So that gives us enough reason. A lot of put buying is still there. That gives one other reason for market to kind of burn all those put buyers and move higher. Okay, so one more leg higher. So that's also one more reason for the contrarian reason for a move higher. Okay, so with that we concluded the major indices and our typical internals look, and let's see how the Bitcoin is doing. It's been some time. Okay, so when we look at futures, it pulled back almost like 40%, 40 50% when it was here. So we see that green candle, which is good. And let me see. Let's try to kind of map it. So if this is really a newer base, right? So we should be looking at that one and that guy. So we would want it to hold above that for sure. As long as it is staying above that, we should be okay. And let's see if probably we could draw that. If it could move a little bit lower, like probably that levels, but overall it's trying to kind of form a range and consolidate there. So it kind of pulled back quite a bit there. So whenever we look at from technical perspective on a weekly basis, um, it's trying to move back above that weekly cloud. That would be very, very good from constructiveness perspective, right? So I would want it to go above that 41,000 level, right? 41,000 and maybe above 42,000, so that it gains back above the cloud and it starts the slow grind higher above until 54. Okay, so that's what I would like to see it happening on a daily perspective. It has a lot of catch up, but a move up to 5100 can happen, and then it could start fading again. Okay, so that's pretty much how it is. If you were in there at these levels and you got trapped, I think that should be okay. It retraced this range, and as long as it stays within the range from long-term perspective, it should be okay. Okay, so that's pretty much about Bitcoin. We are looking at that range, and let's see Ethereum. So Ethereum is leading Bitcoin in the sense like uh, probably you're seeing a constructive action happening in Ethereum first before Bitcoin, I would say, right? Yeah, okay. So I mean, both of them are constructive, but Ethereum is kind of more steep in terms of the bounces and stuff. Okay, so again, it's trying to kind of establish that range, and come on, and it could pull back. Maybe after visiting here, it can pull back a little bit. But again, this looks pretty solid now. Like it bounced here, pulled back, and then again started moving higher, right? So that kind of move could happen here to form a base, like bounce, pull back, and again revisit those levels and start move higher. Okay. So yeah, I think if you are not in it, I think this is a good buy. And whenever it's kind of in this kind of distribution phase, right, after a very big move, you can actually, sorry, I think we don't have much here because the future started only that. So whenever it starts consolidating like sideways, you can play that range. Low end of the range, buy there, and high end of the range, you can sell there. Okay, so those kind of range bound trades you can do. Um, so let's look at quickly some important stocks, right? I probably might not look at earnings for the upcoming week because I'm not actively playing earnings as such, and this earnings for sure I'm not actively playing. So overall, let's quickly look at how the important stocks are doing. Apple above the 50 days average, 5 days average, it looks strong. Pretty good earnings there on a decent move on earnings, and it's trying to stay above the cloud. The Bollinger Band is making room for the prices to move higher. So it looks constructive, and as long as it stays above that 50 days average, you can stay long this stock. Okay. So as the stock moves higher, the 20 moves above 50 and it turns constructively bullish again. Okay. So Apple is pretty strong, and then Google. Okay, let's look quickly at weekly what exactly it is doing. Staying above the 5 and 8 weeks average. That's what you would want to see in every stock that you want to go long. That's what you want to see. Okay, it's above all weekly averages. And if a stock is doing that, probably you can be in that stock comfortably. So Google is trying to do the earnings gap fill there for whatever the earnings pop is there, right? It's trying to do that gap fill, and it can give you a clue on what exactly it will do, right? Like how strong it is, this gap up, right? So it can give you a clue when you kind of plot that and see whether it tries to do a full gap fill or only half gap fill. If it does only half gap fill and then starts moving higher, what it means is it means the stock is strong. Okay, it's if the full gap doesn't happen and it starts moving higher, then you can get long. Okay, so I typically, as the market starts bouncing, it takes that U-turn and then starts moving higher again. Um, Probably a good buy point for you, safe buy point would be on this gap fill. So that is the level 2755. If that, it's a it's very probable that it doesn't even try to fill the gap right now. If the market starts moving higher, it continues moving higher. Okay. Um, Amazon, yeah, overall, if we do not take the earnings into account, right? Overall, it was around 3,000, and now it moved to 3,100, which is very common for Amazon, a $100 stock move. Okay, so that down move, for whatever reasons, right, was neutralized by this up move. And overall, when you see this level from actual this move, it's actually aligning with the overall market, I would say. Okay, so people who got here trapped here uh, based on that, this kind of abandoned baby kind of scenario. Because of this, there might be some momentum higher for a few more days. You know, they want to burn everyone who kind of shorted here. And if the market is constructive, then we could see that it could continue to chug along to induce a lot of pain to people who got out here. Okay, so what we are looking at in Amazon there, is staying above the 38.2. As the market bounces to 61.8 again, it might revisit those levels of 33.50-ish. Okay. Facebook. Facebook, very, very big. Wow, very, very big gap downs. So let's go and see from weekly perspective what it is doing. 200 weeks average. Okay. As much as I want to be cautious, a visit to 200 weeks average is a gift to buy. That I can tell for sure. Okay. So if you are not in Facebook, and if you are looking to kind of get into Facebook and buy the dip, this is a very, very good level to buy. So because I mean, we can go into the past history and then look at what exactly happened whenever it pulls back that 200 weeks average, right? So this is a very, very good level, and probably I would be initiating some long positions by selling put spreads, but this is setting up, a flush before a rally. And with all the technological initiatives that it is taking, and primarily with some of their crypto initiatives for the long term, right? So I think this probably is a very good level. It's a flush and it's a opportunity for us to kind of at least play back from for a bounce from 237 to 285, right? So that bounce we could easily play. So this is at a very good level. I don't see a big concern here. Even if it loses here, it will not go that lower or stay that lower. Maybe for a couple of weeks it stays lower. So if you would like to get overall 100 Facebook stocks in the long term, right, maybe you can start nibbling 50 here, and if it goes down, add 25 more, 25 more, like that. Okay, but I think this is a very good opportunity to get long Facebook as part of this earnings. Okay, so why I'm saying that is, there might be some situations even when Apple kind of pull back to 200 weeks average. Okay, so that level there, and that level there. So those are what you're talking about. 200 weeks average is 200 weeks average is 4 years of average price, right? So you're getting this stock at an average price of 4 years. So that's kind of a very, very good level. So I probably will be seeing a very big bounce in Facebook in the upcoming couple of weeks for sure. So similar kind of thing that happened with Netflix, right? So what happened with Netflix? It touched that 200 weeks average, moved down a little bit, and then again that move from 352 all the way to kind of 450. That kind of moves we could capture, especially quick in and outs, like that. But overall, the trend is lower. But some big investors got into Netflix at that levels, right? Okay, so there might be some weakness, but again, it will just kind of fizzle around for a few couple of weeks, and then it starts probably starts moving higher again if the market is bullish. Okay, so Netflix on a daily level, coming out of the oversold conditions, still negative. We wanted to regain these two first, and then start marching one level at a time. It did almost fill half gap fill, I would say. So it's still bearish. We would want it to see a move above that 457, 460 level, or it could go back and revisit these levels for a continued move move down. Okay, so we covered FAANG, right? Yeah, I think that's pretty much it. So let's conclude this weekend review here. Overall, market is in mild bearish theme, right? But as long as it stays about 200 days average, everything would be okay. Slow grind higher starts soon. The wicks falling wicks is showing that, and also the skew like below 135 and put call ratio still high might give us that hope for slow grind higher for the market to bounce. But if it breaks below 200 days average, be cautious and take it easy for that time frame of 2 weeks where it's trying to form a base. Okay, once it forms a base and once it picks the direction, probably will have a lot of opportunities to play to the upside. Okay, so with that, thank you very much for joining in, and hope you have a very green trading week next week. Okay, thank you very much. See you in the next weekend review meeting.